The markets are trading at the lows of the day. There has been some good news coming in for the mutual fund industry. The data that has been collated by Crisil shows that equity mutual funds saw their assets soar 6% in the month of August. So for the fourth month on the trot, we've seen inflows coming in for mutual funds. We spoke with Sandeep Sabharwal, Senior Director at Capital Markets at Crisil Research, and we began by asking him that equity mutual fund assets have soared 6% in August, and redemptions have also slipped to the lowest in 6 months. So is this a sign that confidence among retail investors is back, or is this a sign of rotation from debt to equity funds?
I think there is suddenly a shift towards equities, and that's evident in the mutual funds. So if you look at August, the overall AUM actually went up by more than 6% for equity funds and balance funds. And some part of it is due to increase in the market. If you look at the benchmark indices, which is the Nifty, the Sensex, the mid cap index, all have gone up by 3%. So the remaining 3% actually is coming from sort of fresh inflows, and which has been and this has been a secular trend which we've seen in the last few months in equity MF. So this is a positive sign.
But are institutions moving money from debt funds into equity, or is it the increase in inflow mainly because of better retail participation?
Sure. So, institutions as such, or major treasuries as such, do not invest so much in equity funds. Institutions are more of investors in debt funds and liquid funds and income funds. So the interest that we are seeing, there's suddenly a retail and HNI interest that is picking up in the equities, and that is evident in the mutual fund industry.
All right, and when it comes to the redemption, what kind of pressure is being seen in the income funds?
Right, so income funds, suddenly there has been outflows. The outflow has been upwards of 10,000 crores both in August as well as in the previous month, which was July. And the reason is straightforward, because of the budget announcements, which actually increase the tax rate and increase the holding period for income funds. That has had a adverse impact. So if you look at the overall mutual fund industry, the overall industry has grown by more than 22% since the beginning of the year. But the income funds, on a YTD basis, have just grown by 8%. And in the last 2 months, actually, it's been more of outflows rather than inflows that have come in the industry. And obviously, the tax implications actually are a cause for that.
And when it comes to the equity funds, what kind of equity funds actually saw the maximum inflows?
So the equity rally is broad-based today. I mean, if you look at both the mid-cap and the large-cap indices, both have given about a 3% return. Even on a YTD basis, if you look at it, the Nifty is actually given a 26% return, while the mid-cap index is actually given a much higher 38% return. So although we don't have the August numbers between large and mid-cap, but it's fair to estimate that the equity rally is broad-based across categories within equities. Though one thing is that the ETFs, you had asked a question on ETFs. So ETFs itself have not grown so much. The AUMs actually remain flat, and the increase in AUM has been more due to mark-to-market rather than large flush inflows. I mean, the AUM itself is more in the is less than 10,000 crores in ETFs today.
On a net basis, mutual funds have mobilized around 3 lakh crore rupees this year so far. Can this momentum be sustained in the rest of the year as well?
So for forecasting, we have to look at the underlying factors, and I'm going to just talk a little bit around the underlying factors. Right. So the underlying factors on the equity side are clear. It's really corporate earnings, which are going to sort of drive flows in the equity side. And in Q1, if you look, in the last quarter, we did very well. India Inc. did well. I mean, revenues grew by close to 12%. EBITDA margins actually increased by more than 100 basis points, and EBITDA margins today in Q1 were about 17.5%. And profitability of India Inc. actually increased by more than 40%. So the Q1 results were certainly encouraging, and the EBITDA margins increase was both in large caps and in small caps. So the Q1 results were encouraging, and so any further growth, in equity markets will be driven by corporate results going forward. Today, the Nifty actually stands at 17 times FY15 earnings, and if corporate results keep pace, then equities will continue, and equity mutual funds will continue to get more inflows. On the debt side, it will be driven by both tax purposes and by the easing of interest rates. So today the interest rates are close to a 10-year GSEC is close to around 8.5%, and our FY 2015, so March 2015 call is also around 8.5%. So we expect interest rates to remain flat over the next over this fiscal. And therefore, any inflows will have to be more long-term in nature rather than any short-term gains from decline in interest rates.
So that was Crisil talking about the mutual fund inflows that is on the month of August. We'll slip into a break at this point of time. The Nifty is holding on to 8100, but when we come back, we'll take a check of the macroeconomic conditions with oil prices headed lower. We'll speak with